Hey, and welcome back. And today, after all the news and rates have finally started to drop down, and now the question everyone's going to be start asking us is now the time to refinance? And the answer will be, well, it depends, right? It always depends on the individual, I think. But I think sometimes people get this wrong, and I think so. Today, me and Mark Haggard, we're going to go back and forth and talk a little bit about the mortgages, refinancing, what people need to know and think about before they pull that trigger. And it's not just as simple as, hey, my rate is lower, let's make that jump. So I think we need to dive a little bit deeper into that. So today, me and Mark are going to go back and forth to that. So thanks, Mark, again for joining us.
You bet. Thanks for having me, Scotty. I really appreciate it. One of the things that I think of right away, the first question that I would ask somebody is, what's your why? Okay, why do you want to refi? Okay, what's that going to happen? Why are you wanting to do this? And then we can have a great conversation from there. Okay, determine, are you trying to pull in, are you trying to pull money out of the property? Are you trying to lower your interest rate? Are you trying to extend your term? Or you want to reduce your term? So on and so on. So we can discuss some of those types of things.
I think that's a good place to start because, yeah, are you just looking to lower your monthly payment because you heard the rates are dropped? And maybe that is a right decision for you. And it's really simple. Hey, I'm going to save a couple $100 a month, and that's what I want to do. Might be pretty simple as that. But I think what people sometimes, how much of an interest rate drop does it take for that to make sense for people? And that's going to still be, well, it depends, I think, too, right? Because maybe if you only own $100,000 on the loan balance, maybe a full point doesn't really even make sense for you to drop it. But if you have maybe a $500,000 mortgage, well, half a point might make sense to refinance. So I think you need to look at the math, and hopefully by the end of this, I'll put a calculator that you can check out to look at some of those numbers for you to see if it does make sense. What's your break even point? But what do you think, Mark, on some of the kind of general rules on refinancing?
Sure. I think some of it too comes down to just like what you're saying. It also depends on how long have you been in the loan? How long have you been paying down your principal? Okay, where are you on this? Did you just get into your mortgage, a year, 2, 3 years ago? Okay,
Mm-hmm.
because now you're not paying much. You haven't paid much on your principal yet. So dive in because you got to remember, as soon as we close, we do a refi and we close on that loan, you've started your term over again. You're back at square one. Okay, so you're starting again. But again, hopefully, with what the refi that we've done, we've helped to for you to get the goals that you wanted to achieve out of this, whether it was cash flow by lowering your monthly payment, lowering your rate, or if it was getting that money out so that you could do some maybe some rehab to your house and maybe add on that extra room or that pool in the backyard.
Yeah, I mean, I think especially right now where a lot of people might have locked in maybe low interest rates, or maybe they didn't refinance during the really low times, and their home value has gone up over the last 4 or 5 years. Maybe you're like, hey, I do have some deferred maintenance, or there's something that you want to do to the home. Maybe now, as the rates have come down a little bit, maybe it is a time to go ahead and do that cash out refinance right now. You start over again, but you're able to do those things like maybe put that roof on, build that extra addition, do the pool or whatever, that you're looking to do to the home because you plan on staying in the home. And I think that's a key thing that we should mention is like, hey, we don't recommend doing a refinance if you plan on moving next year, right? Like,
Agreed. Yeah.
yeah, so it's got to be something that you plan on staying in this home. Typically, as a realtor and as a loan officer, like I always tell people, hey, don't be buying a home unless you want to be there for at least 3 more years. Is kind of my general rule, right? Obviously, the longer you stay, the better. Yeah, 3 to 5 is like, hey, you're probably going to break even as far as cost wise and refinance wise or moving wise.
Yeah.
It's usually kind of a general rule that we kind of live by.
Yeah, and just to clarify, the reason why we have that rule in place is because of all the upfront costs, your appraisals and your closing costs and things like that. We want to make sure that you're able to receive those back in equity that's been generated, whether it's just based on the economy or your pay down on principal. You're making a good, wise investment here.
Yeah, because there's a break even point, like Mark is saying, between like the closing costs, and let's say, and then every case is gonna be different, but let's just say like, hey, it's gonna cost you $5,000 to do the loan from the time you pay some title policy fees and getting the loan itself to get that lower interest rate. But then maybe you're like, hey, well, I'm doing this. Are you paying points to get that rate even lower right now to buy it down even a little bit more so that you can have more savings over the long term, right? So there might be costs that when you get into it, they go, okay, well, I really want that lower rate and I'm going to do this. So I don't want to do this again in, 6 months. And I can't probably do it again in 6 months. I have to wait a minimum of a year, right, before I can do another refinance. So
Yep.
if I'm going to do it this week, let's go ahead and if I have to pay a little bit money right now that I know I'm going to quickly get that money back over the next few months and years, well, then it makes sense to go ahead and just make that decision as there too. So this is definitely a conversation you need to be having with your loan officer. Obviously, Mark or myself can help you if you are in search of a loan and need someone to talk through both of these situations. We're more than willing to help on that point.
Absolutely. If you look at some of the other videos that we've done, hey, what's the loan to value that I should do? Okay, what kind of, how long, what kind of term should I be doing on my property? Should I do a 15-year mortgage? Should I do a 30-year mortgage? We've got some other videos that kind of show that whole piece. You're kind of determining what that is going to be. And like I said, ultimately it comes down to what is your why? Why are you refinancing? What are you trying to do with this, with your investment that your house is?
For sure. And so I'll tell you a personal story of mine. Like, got to go back about 10 plus years, but I was at another home that we owned, and we had bought the home on a 30-year fixed. And, after we were in the home a couple years, the rates had dropped, and I said, hey, let's take advantage of this lower rates. But like you say, I didn't want to start over on a 30-year. And so what I told the loan officer at the time, I said, hey, I want to do a 20-year, right? So what I ended up ultimately doing was, although my payment was about the same, I was actually knocked off about 5+ years of the mortgage, because I think we were 3 or 4 years into that current mortgage, 30-year mortgage. And so I kind of reset it, but I set it as a lower target, and I kept my payment about the same because the payment was affordable to me. We were able to pay that mortgage payment at the time. And I said, well, I don't want to just get a lower payment. I want to actually reduce how much interest I'm paying over the next so many years. Unfortunately, a couple years later, I went through a divorce, and so it didn't work out as planned. And we can always know in the
Yeah,
future.
nuts.
But I think at the time, like, my thinking was on point. Where like, hey, I'm trying to reduce the mortgage principal. I'm trying to save interest, and from a cash flow perspective, my goal wasn't to get the payment lower. My goal was just to, hey, let's just save money monthly, and over the long term, build more wealth by paying down the mortgage, a little bit faster, right? Instead of just paying more interest. And Mark said we had the whole video about, is a 30 versus a 15 better? But there's also, there's a 25-year you can get, there's a 20-year you can get. You don't have to just necessarily stick to the 15 or the 30. So I think that
Right.
sometimes people don't even realize that you can get a 25-year mortgage, or you can get a 20-year mortgage, right? You don't have to stick to these, like, just 15 or 30. So
Right. Exactly. Exactly. Back to that whole piece that you were talking about. You're trying to get into cash flow because you wanted to make sure that you're covering all your bases and you've got an extra cash at the end of the month. That's wonderful. But there's many things that you can do with that extra cash flow. That extra cash flow could actually, if you did a 30-year mortgage instead, and what that cash flow might have created for you, and then make sure that you're disciplined enough to pay that principal down, to take that extra cash flow and put it to your principal, you might have been able to pay it off sooner than 20 years, frankly. Okay.
yeah,
So yeah, so that's another potential strategy. But again, you never know where life's going to take you. So
yeah. Well, at the time we had car payments too, so maybe it would have been smarter just to go ahead and refinance at the 30, take the lower monthly payment, only 3 or 4 years into it, start over at a 30 again, take that extra cash flow we were saving and throwing at the cars, which we know is a higher interest rate and
yep,
on a depreciating asset. It might have made sense to tack those first and then turn around and then, okay, now that I got all this extra saved, now I have these $500 a month car payments. Now this extra, $1,000 a month, I can throw that back at the mortgage. At that point, getting the principal payment down, so I pay less interest over the life of the loan. So there's no one size fits all answer, I think, for that. And since we did our video, Mark, with is your home an investment, is the 15 versus the 30, which one's the right one? I think there's not a one right answer for one person, and maybe someone else feels different kind of way than I feel about that,
right,
answer. So I'm not going to convince any one person, say, hey, this is what I think you should do. But I think you should be
right.
informed about what your plan is and what you want to accomplish, because it's your life and it's your money. So you should decide the plan that you are going to work and the plan that you want, and then stick to that plan.
Absolutely, absolutely. But see, again, that's why these conversations are very important. There are a lot of different options, and the other thing too that's really cool is that there's so many different products, so many different types of loans that we have access to. So again, we can also help out from that perspective as well. So, and depending on what you're ultimately trying to do, that's why I said what's so important is we need to know what your why is and why you're doing this refi. And actually, another thing to take into consideration is that how long are you planning to stay in this property? Maybe it doesn't make sense to do that. I mean, if you're looking to move, a conversation you and I were having earlier, Scotty, is that if you're planning to move in 6 months, you probably don't want to do a refi. But if you know you're going to stay here for the next 30 years, planning that you don't want to move ever again, okay, fine. Then let's talk about that. Okay, let's talk about what might be the best product for you and the best rate.
The other thing is that if you had bought your house with maybe 5% down or FHA, maybe the refinance at a lower interest rate, maybe now it is time to remove that private mortgage insurance, that PMI payment, just to save you that, because that's really not going to the principal. It's not really doing anything for you. It's not protecting you. It's really there to put in place to protect the lender in case you default. So that lender insurance, that mortgage insurance isn't for your home and it isn't for you. It's for the mortgage lender to be protected, that's a little, money, it's insurance for them. So maybe that's a cost that you can reduce because your home has gone up in value over the last few years. So now maybe your ratios make sense that your loan to value is close below that 80% ratio where you can remove that PMI or, mortgage insurance premium either way, depending on the type of loan you have. So I think that's
Yeah, agreed. Yeah, yeah. Again, it gets back to that whole cash flow piece. So and how we're all working this through because again, maybe it makes sense. Maybe you don't want to put a whole bunch into the property. So maybe you want to go ahead and have that 95% loan to value, and so you're okay making that mortgage insurance premium. But that's because you're gonna sell this house in 3 to 5 years. Okay, fine. So maybe that way you're able to keep more cash in your account. Okay, great. But then coming back around to the other piece, just like what you're saying, wait a minute, maybe I'm looking to retire in the next 10, 15 years. So that being the case, maybe I want to, refi this so that I can, again, I can get that mortgage insurance premium off. I can then use that um, towards towards paying down my principal. So I'm that much closer to being free and clear.
That's a good call. So like I say, if you are in that decision point where you need someone to help bounce some ideas off, you can contact Mark. I'll put his information below and in the chat below, so you can see his information there. And if you are interested in applying, Mark, you mostly do loans in Colorado. Is that correct?
That's correct. Yeah.
Yeah.
Anywhere in Colorado.
Mark is a realtor there too, and a loan officer, and I'm happen to be down in the great state of Texas myself, and so down in Houston areas where we primarily work as real estate agents, and then obviously both of us are able to help you out throughout the country, but those are the states we actually reside in and know the most about.
Exactly. No, this is great, Scotty. But I think, again, just to kind of bring this back around, it comes back to the original question. What's the why? What are you trying to do here? We have a lot of different options. There's a lot of different things that we can help you with to help you think about what you want to do. And at the end of the day, again, we will make sure that it is the best product for you. Okay, to make sure that you are getting into something that you are better off at once you close on the new loan than you are prior to.
Yeah.
So that's our job, is to make sure that we're setting you up for success.
Awesome. No, I appreciate that, Mark. As always, we're here to bring you real life experience to all your real estate needs. Like and subscribe.